All
All
right.
right.
It looks like people are starting to come in.
Cool. Do we have chat enabled, or are we gonna take that risk? I don't know.
Yeah, it should be. Actually,
Okay.
while people are trickling in, I guess the fun game that we all like to play is like if people want to comment where you are logging in from, that would be awesome. Thank you all for joining.
The
And
person who lives the furthest wins away from me in Miami.
oh,
I don't know what you win.
we should do like a swag game someday of that.
Yeah. Well, we have people Tel Aviv, Amsterdam, like that. That's pretty far from me. And are you Bay Area right now, Elizabeth?
I am, yeah.
Nice.
So yeah, I guess Tel Aviv might be winning so far.
Yeah. There we go. We got Washington and LA. I do miss parts of LA. I used to live in LA, for those that don't know, for a couple years. It's nice.
Yeah, actually, when you were in LA, were you by the beach or not really?
No, I was in Hollywood Hills area.
Oh, okay.
Yeah. Venice and the beach area is like a totally different city, I feel like, than Hollywood. Um, Also, from a travel perspective, it feels like a very different city too. It's a long ways.
Yeah, the first time I went to LA and I had a bunch of meetings and some were downtown, some were in the Venice area, and I just had no idea how long it would take to go from
Mhm.
one place to the next. So I never did that again.
Yeah, it's
But
actually one of the. I know I'm totally going off on a tangent here, but this is one of the biggest challenges with LA tech scene is it's so scattered and it doesn't have the density and the serendipity of San Francisco, where you walk out, a few blocks and there's a meetup or there's an event or there's someone else in tech. And I
uh-huh.
found that very difficult, to build more of like serendipity in tech, being in LA.
Oh, interesting. Okay. Huh. Well, welcome everybody. I guess people are starting to trickle in. We had over 200 people register. And it looks like we're playing this little game of like who's logging in from the furthest place away from Ryan. So that might be right now Irfan from Bangladesh. And but we'll see. We'll see. This game could still be won by somebody else.
Honor system, no lies. Yeah, got to be truthful.
All right, well, we will get into sort of the meat of this in the next couple of minutes, but I think in the meantime we're just sort of chit-chatting and shooting the breeze. I guess what's top of mind for you in 2023, Ryan?
What is top of mind? I don't know. It's I'm loving, not to talk about location and weather, but loving Miami right now. It's just like beautiful in the winter, but I found that like being in nice weather just gives me like more energy and like, I don't know, more positivity. But I'm more on topic. What is on my mind? I don't know. It's interesting to see the market and how different it is from, even 12 months ago, 18 months ago. And I was talking to someone earlier today about this. And in some ways, it's like short-term painful, long-term good for, I think, a lot of markets, both investors and perhaps founders, because it is harder to raise for your average founder right now compared to 18 months ago. But you have a lot more talent to recruit from. Theoretically, you have more believers, like on the investing side and, the team side, like maybe people are more committed if they join your company, or invest in your company. So there's a lot of optimism, I think, that I have, even though, there's layoffs and, a lot of people are struggling to raise, but that's kind of where my mind's at.
Okay. Well, I'm sure we'll get into a lot of that in a second. So why don't we go ahead and get started? I think, for everyone, this is an AMA format, as in you can literally ask Ryan any question you want and I'll help moderate those. But I think as we warm up, I'll kick it off with some questions. And I think before we even dig into some questions, would love to just and do some quick intros. So actually, Ryan, I think many people already know you, but would love to just sort of officially kick this off with your intro. Like, tell us a little bit about yourself.
Yeah. So where do I start? Yeah, I'll give you the quick version. Grew up in Oregon, to entrepreneurial parents. So I learned a lot from my parents, particularly my dad, around like entrepreneurship, and just really enjoyed the idea of like building basically solving problems or building a thing that people liked and used and hopefully paid for. And the most motivating thing, frankly, for me was this realization that you could actually make money, but not selling your time. Like you could create a thing and then you could make, and it wasn't even about making a lot of money. It was just like, oh, I don't get paid by the hour. Like basically my income is based on like my theoretic market value creation or whatever you want to describe it as. So anyway, I always kind of enjoyed entrepreneurship, and fast forward, my first career in like tech was in the video game industry and product management. And well, technically it was first marketing, and then I fell into product management. Had no idea what I was doing, as a lot of people do in their first, full-time career, and learned a lot. And then, in 2013, started Product Hunt, primarily driven by my interest in technology. I always loved discovering products. I love community building. I love building, in general, and spent a lot of my career, 7 years as CEO of Product Hunt, through an acquisition, some rounds, and then started Weekend Fund back in 2017 to invest in early stage tech.
Yeah. And I think we met even like years ago, way before you even started Product Hunt. And so we'll kind of dig into that in some of the questions. But I think let's just kind of kick us off. I think many of you think, many of the folks in this audience think of you as like, Mr. Product Hunt or Mr. Product, like, a lot about what makes for a great product. You've seen what does well on Product Hunt, et cetera. And I think that's something that's always sort of top of mind for many builders. Like, how do you kind of assess like what makes for a good product? Is it, especially at a startup when things are not, fully baked necessarily, like how do you think about, I don't know, creating a great product when you just have maybe one or two people?
Yeah. I mean, fundamentally, a product is a solution to a problem at its core. And so I think it's useful, as like sophisticated as like we like to think we are. Sometimes it's useful to like ground yourself and be like, okay, what problem am I solving and for whom? And my dad always had this saying, it was like, find a need and fill it. It was like this phrase that he had that I just always appreciated. It was like, oh, okay, that's kind of the core of entrepreneurship, and I think products in general. So I think that's a good place to ground yourself. I mean, what makes for a good product is like, I mean, it is solving a problem and a need, but it's also positioning it in the user's mind. So there's an aspect of like, product is one thing, but you kind of have to get a lot of the other pieces right too to be successful. So the old classic is like, theoretically, you could build the best product in the world, but if no one knows about it, there's no distribution. If it doesn't resonate with people, they won't try it, and it just won't go anywhere. And so in some ways, like building a good product kind of, I think, requires more of a holistic perspective of like, who you're building for, how does it position in their mind? What are they doing right now to solve their problems? And how do you like insert yourself into that maybe decision criteria or workflow? And so it's kind of like you need a bit of marketing perspective, branding perspective, and then certainly you need, depending on what you're building, the ability to actually build it. So in some ways, building just a good product isn't sufficient in many ways. But yeah, at the end of the day, like at its simplest, like foundational level, it's about solving like a real need for a very specific customer or user in the beginning.
And to ground that into something very concrete, actually, can you talk a bit about how Product Hunt evolved? Like, what did day one look like in trying to solve the problem that you were trying to solve? And then obviously we all know what it looks like today, but like, how did you kind of evolve to get to where we are today?
The kind of funny thing is there's certain products in this world that they've evolved quite a bit and they mature quite a bit, but they actually aren't too different from how they started. So I'll talk about Product Hunt in a second, but let's use Twitter as an example that everybody knows. Like Twitter obviously started off as, text-based, like 140 character messaging, and you broadcast to many followers. And since then they've introduced a lot of things like retweets and media polls and a lot of these other features. And they're all valuable and useful and everything. But like at its core, Twitter's still kind of still the same product. Like if you removed all those features and it was just text-based broadcasting with a follower model, you get most of the same value that you get today, which is kind of crazy. It's almost like sometimes products don't require a lot of things. It's like having more features, more things don't necessarily make it better in all cases. Now that's not necessarily true for everything. Like let's take Airtable, which is like the exact opposite. Like that's a beast of a product that took many years to build and get to a scale where it's like sufficient, I suppose, for a lot of customers and users. So I don't believe in absolutes sometimes when I talk about these things, but on the product side, we the very beginning was a newsletter, so wasn't even a community or a site, but it was just a newsletter of products that me and friends found. And it was motivated to explore what people were creating. I wanted a single list of cool new things that were there every day, and that was like that. I mean, that was the MVP. And from there, we built the site, which again, kind of similar to the Twitter comparison. Like Product Hunt, the site is actually very similar to what it was in its like MVP state. It was a list of postings that were organized by date, like a daily leaderboard of sorts with upvotes and comments. And of course, we added a lot of things since then, like dedicated product pages, and at user mentioning and follower graph, and gallery images, and a lot of other things, which are all useful. But like at the end of the day, like the core loop is the same. It's a place to discover what's new in technology for consumers. It's a place to get your product out there to the world. And so yeah, that's kind of how it started. Very simple at the very beginning.
And when you had that newsletter, and I remember that I was one of the subscribers, when you had that newsletter, I guess walk people through, for those who were not on it, like what went in that newsletter, how, like, what was the specific problem you were trying to solve at that time, stuff like that.
Yeah, well, so I wasn't trying to build a company or startup. I was just tinkering and playing. And at the time, I just liked building and trying new things, and I liked community building. And I was working on a couple other the past like community related kind of projects, but none of them were like supposed to be billion-dollar companies with like, I didn't have like a whiteboard of flywheels and like all this like thought that was put into it. And so it was really the cliche scratch your own itch, like, oh, here's an idea, let me throw it on the internet and see what happens. And the need that I was trying to solve actually I wasn't thinking about makers or founders at all. Not once did I think about it becoming a distribution channel for them, which it's kind of embarrassing to admit to some extent. It's like, of course I should have thought about that. But really what I was trying to do is solve my own problem or desire, I should say, to like just see new cool products every day and see them from my friends and see if other people enjoyed that type of kind of discovery experience. What we really realize is while that's valuable, we actually kind of evolved more into like a launch pad of sorts, where we found a stronger need on the maker founder side to get the product out there to launch new things to the world.
And at what point did you decide to go all in? Like, okay, this is more than a side project. Let's turn this into a business.
It was, I'm trying to remember the timeline. Worked on it on the side for about 4 or 5 months. So I was transitioning out of the company that I was at, kind of around the time Product Hunt was getting started. And I spent, I think, 4 or 5 months building it out. And Nathan Bashaw at the time, he changed his last name to Baschez after he got married. So I have to remember to use his new name. But he and I worked on it on the side for a while. And so, yeah, it was like 4 or 5 months or so before I realized, okay, this is growing. There seems to be, there's an opportunity here. I could see where it could go long-term. I could see myself working on it for a decade. And then the question really was, how do we build a team? How do we grow it? And that's why we raised money ultimately and went full time.
And I think when you raised money, I guess, what was the state of Product Hunt at that time? Just to give people a sense, was it off of the newsletter, or did you have a basic site up at that point?
Yeah, the site was up. So the newsletter was only, I think it was only around for like a month, maybe 6 weeks. I could be off on that a little bit, but it wasn't very long that we had just the newsletter. And the site itself, worked with Nathan on that, and that was about over Thanksgiving break, about 5 days. It was kind of like from sort of the mock-ups and this like general idea to like MVP on the internet. So the site was around for at least 3 or 4 months before we raised money, and we had, I'd have to look back on Google Analytics to see the exact numbers, but we had like tremendous growth, and like very quickly it captured the attention of like the tech industry. And the fundraising process was interesting too, because it was both, at the time it was fairly bull market. Valuations were very different than they are today. Our first round was a 5 mil cap, with a ton of traction today. Even today, that'd be more like a 20 mil, maybe 25 mil cap. So very different valuations, but yeah, we had a lot of traction, and because we were building for the tech industry, pretty much any investor who was following the trends knew about Product Hunt. So there was a lot of interest, but I didn't want to just jump in and accept money before I was like convinced that this was the right path.
Mm-hmm. And we'll talk more about what the market looks like today in a second. But I think I want to just take a pause for a moment for those of you who just joined us, if you are interested in asking Ryan your questions, you have the opportunity to do so. Just comment in the chat or in the Q&A function, and we'll start pulling from those in a few minutes. Ryan, let's shift gears a bit and let's talk about your career in investing. So, when you invest in companies, what are you looking for? And do you care a lot about product? And, what does that look like? Everything is so early. Tell us a little bit about how you think about things.
Yeah. Yeah. So we're kind of like, we have some parallels in terms of weekend fund and hustle fund, and that we invest in all kinds of things. So you invest in B2B, you invest in some consumer, you invest in like all over. And we love that too. Like we like the ability to have that flexibility, because we also aren't going to pretend to know exactly what spaces or opportunities are going to be most interesting. That said, we have sort of a through line in our investments, which is we're really trying to understand like what is the technology shift or opportunity that's new today, or the consumer behavior shift that's kind of emerging. So whether that's like emergent behaviors or generational shifts, or even to some extent, like things like COVID, of course, changed the way that people live and work to some extent. Like all those things, we try to really understand what insight does this founder and team have that's capitalizing on these technological shifts or consumer behavior shifts. And then, and ultimately it's kind of come back to like a why now kind of question. And this does tie back to Product Hunt too, and to some extent. The thesis behind Product Hunt in part was it will become easier and easier to build products. And so therefore we'll have more people starting companies, and distribution will be even harder. And so I think we've seen that magnified 10 times with no code, and now with AI generation and tooling, we're going to see the bar lower and lower. And so therefore there are more people that are willing and able to execute on their ideas. And so a lot of our sort of decision criteria is assuming that someone's thought about this, assuming that someone's probably tried this idea in some form. So there has to be something that's changed that enables us to happen today. But then going back to your product, your question about product, even though we care a lot about product, we're also okay with it being really ugly and like kind of broken. And especially when, this too, Elizabeth, like, sometimes people just started, like we talked to founders who literally just started like a week or two ago, sometimes with their idea or started building. And the thing is we care less about like what it looks like today, but actually more the decisions that went into what they have today and where it's going. So having a demo or having a product and being able to talk through those decisions, I think is helpful, because then we can get inside the head to some extent of like, okay, well, why is the onboarding flow like this? Or why did you prioritize this feature? How are people using, this product today? Those types of questions are insightful for us.
Do you think the bar is higher today in terms of like what you need to see in a product? I mean, just given how it is easier to actually, no code things together or launch things on Product Hunt.
You mean bar in terms of the quality of the product, or?
Yeah, like when you decide to invest, like how baked does it need to be?
I don't think we have like a blanket rule per se. I think another factor that kind of comes into it too is we try to understand what are the risks in the business. And let's say in some cases, let's say it's a B2B. Well, the extreme version is, okay, I don't know if this is the best example, but like if you have a cure for cancer, we know there's demand for that. It's just like, can you find a cure for cancer? Do you have it? So that's more of like in our tech software world, like that's maybe technical innovation is what's required. In another case, it might be less so about technical execution and more about, is there a market for this new idea or this new thing? And in those cases, we just take a slightly different lens in how we evaluate. So in some cases, if it's an existing mature market, solving a known problem, we might lean more towards technical, well, maybe closer to this question, more on like the product execution. Like, is this team, do they have the skills, and does what they're showing now illustrate strong technical execution and understanding the customer to be able to deliver on this product, promise.
And so more broadly speaking, Devin is asking, what type of patterns do you look for in founders? And I would extrapolate beyond founders. Like basically, I think everyone wants to know, what are you looking for?
Yeah. Yeah. Some of it, well, a big one is like insights actually. And what I mean by that is if we come to a call and we don't learn anything about what they're building or the space, either we're not asking the right questions as investors, or they just don't have maybe the maturity in terms of their stage to be able to have those insights that I think will unlock what's required for them to build or market or distribute the product. So I guess another way of saying it is like, when we come to a call with a founder and we come away with like, oh, I didn't know that, or aha, or wow, that's counterintuitive, I didn't expect that. Like, those are the types of things that we're looking for, because I certainly shouldn't know more than them if they're building a company in any space, frankly. So that's a big one. And then the other is understanding the skill sets from the founders of the team, and one, identifying what are the biggest risks in executing on this, and do they have the team and the skill sets to do that. So an example might be, they might have a lot of insights, let's say, into some new workplace productivity tooling, but if they have zero design skills or history of like building really strong product from a software perspective, then that would give us a little bit of an orange flag in terms of like, well, is this a team to build this? I'm not sure. The other example could be, maybe they're super strong in product and design and they have tons of experience there, but they're trying to build something technically very challenging. Maybe I wouldn't not necessarily invest in somebody building like AI tools, let's say, that have more of the product UX kind of experience, less technical side, but it would lead me to be a little bit more cautious, because I do believe if it's truly like AI driven, you're probably going to need very strong technical talent to basically to effectively build a stronger, better product than all the others in this market today.
Mm-hmm. That's fair. And I think sort of a somewhat follow-up question to that, James is wondering, how can I pitch you? I think many people in the room probably are curious about that as well.
Yeah, just email is the easiest thing for me. So Ryan@weekend.fund. And yeah, I mean, the pro tips, not just for me, but I think for everyone in general, is being very succinct, being very clear on what you're building. I do get some emails where I read about a paragraph or two and I still don't know what they're building. I'm like, wait, what? And I'm like, am I dense? Like, I don't understand. You kind of have to, well, one exercise, one test is to ask your friends to read it and give feedback, and ask them to be honest. Even better if you can ask a stranger to read it and like have them repeat like in their own words like what you're building or what you're doing. It's really difficult sometimes as a founder because you're like so in the weeds, you know everything about it, and you kind of forget they don't know anything about what you're building. They have no context in some cases, so that's important. And then I mean, the other thing is like there is an aspect of making it personal, and not like fake personal, like, hey, I see you invest in consumer app companies like paparazzi. Like, maybe that's okay, but it's not the best kind of personal email outreach. The best personal outreach is something that's truly authentic and shows that you put in a little bit of work. I know this takes a lot of work, especially if you're emailing 100 investors, but there's this reciprocity piece where if I see a founder who I clearly saw put in effort into an email that's actually authentic and personal, then I feel even more biased towards like paying attention and responding and diving in.
Mm-hmm. Yep. And, I think one question that's kind of come up a bit is, Preeti says, I love how you invest in global companies. When you're looking at companies in other countries versus say in the US, like, are there particular metrics that you're looking at that are the same or different, or how do you think about that?
Yeah, we invested, I want to say maybe 10 to 15% of our portfolios outside the US roughly. And that's, a bunch in India, some in Europe, few in Brazil, few in Canada. And I would say like the metrics aren't necessarily different. However, well, they're different in some cases. Let's take India as just one example. So India, obviously massive from a population perspective. It's also one that's increasingly more online in terms of like, internet adoption and accessibility that's growing. And so you do see some, especially consumer focused Indian-based companies with tremendous growth, like growth that you don't normally see in a lot of like US-based companies, partly just because the baseline, the multiple that they're building for is just much higher. The challenge there is generally, and this varies, but generally like the average revenue per user is just going to be lower, like dramatically lower. And so you can't necessarily compare, the number of users, let's say in an indie-based consumer app to, a US-based consumer app and on average, and say that they're like equal in value or equal in like revenue potential. And so there are those elements to it. But otherwise, like when it comes to engagement and things like that, I don't think in general we have like a different perspective of like evaluating. I think it's just probably the biggest thing is the revenue potential for different geos for us.
And so I guess like double clicking on that, like traction wise, is there something that you care about, or you don't really care about that, or how do you see that?
Yeah, I mean, obviously more traction better than no traction. That said, we invest in companies sometimes with no traction or pre-product, and so, but yeah, it really varies. So in the case of it's like pre-product or pre-traction, we really try to understand even more so like the insights the founder has, the team has, and their ability to execute on their vision. Like that matters even more. And then the further they are along in the process in their product, while those things are still very important, if it's working, if there's traction and it's consistent, and we don't believe it's spiky or temporal, then in some ways it almost doesn't. I mean, it does matter, but it doesn't fully matter what our instincts are and their vision necessarily. It's almost like, well, the market is saying something that maybe we don't even understand, and so traction does matter, or rather has a big impact in like our decision to dive in and maybe invest.
And I don't know if this is still relevant today, but Abdul Hakim is asking what was the traction like for Product Hunt in the early days? Do you think people funded you based on your growth or absolute numbers, or if you could provide sort of some context around how that worked?
Yeah. I need to again look up the numbers because it's so long ago now. I forget the exact numbers. I forget if it was 50% like week over week or 50% month over month growth. But anyway, it was something very high in terms of that was just purely like users, both visitors and like user signups. And so that was maybe very consistent for the first 6 months, year. I can't remember exactly how long. And so that was a big part of it, certainly. A lot of people, even though we had a lot of interest and we were building something for the tech community, so it's easier for VCs to kind of understand like how it works and who it serves, because basically they were the customer to some extent. There were certainly some who had a lot of doubts in terms of, I remember one criticism was there aren't enough products like launching every day. Like how could this how can you have enough content every day to like have this leaderboard? And again, going back to what I said before, I think my belief was like, well, there's a lot, and actually, there's going to be a way more in the future. So I didn't think that was going to be a concern. But yeah, I mean, it was a combination of the traction. It was also, I think people understood the vision and where we were going. Now, Product Hunt's vision, the pitch is actually a little bit different than what it's turning into, and I think that's also okay in any company because you should adapt to the market and what you're building. But back then, the idea was okay. Well, we're starting with tech, but there are communities and audiences and challenges and distribution for every other category too, including music and movies and fashion and beauty and video games and everything else. And so the vision, I think we executed well on both communicating the short term. Here's what we are today. Here's the traction to show that people are using it. And by the way, here's where it could go. Here's what it could become. And I think in investors' minds, they were like, okay, is this the next Pinterest? Kind of like this is back when Pinterest was also on the up and up, but for a very different use case and kind of audience, but similar dynamics of like user generated content, expanding across many different categories and use cases.
Yeah. And Kudlu is asking, when in those early days, as you were growing, how did you kind of balance, quality versus growth, if you will? Like, did you attract top product people in the beginning and kind of make sure that they were there from day one? And how did you kind of keep that up?
Yeah, that was the sort of community design is critical. And this I think matters so much with communities is that in some ways, if you build the exact same product, but you have two different communities, actually I use this metaphor probably too much. So if people have seen me talk, you probably heard it, but I'll say it again. Communities are sort of like parties in a sense. It's like if you're invited to a house party and like literally you don't know anybody there, even the person that invited you, you don't even know who that is, you're gonna probably not go. But even if you go, you're gonna walk in and be like, especially for the introverts like me, you're gonna be like, I'm gonna leave. Like, this is not like, I don't know, they might be great people, but it's just not a welcoming kind of experience versus a house party where it's like your best friend's like, hey, we're going to this cool party, and you go there and you meet three people that you know and you respect, and then they introduce you to a couple other people that you kind of get along with, and there's this feeling of like being welcomed and like, here are my people. And that's what we tried to replicate in the early days of Product Hunt, in the sense that we invited people who were VCs and founders and just like kind of early adopter folks. Many of them who had like not super large followings on Twitter, but like medium to large size followings too. And it really created this feeling of like, okay, I know who's here and I respect these people who are posting about these new early products, and I want to check it out. I want to at least step in the door. And then a lot of those people stepped in the door and they enjoyed it. And then we did a lot of little tactical things. Like sometimes I would, for a large portion of signups, I would email them personally and welcome them, and give people access to post. And then I'd ask some of the people who are already engaged, hey, do you want to invite one or two people? Just CC them on this email if you're interested. And that's the equivalent of like having a friend invite another friend to the house party. And so it was a lot of that, a lot of emails, a lot of tweets, that I think built like that initial strong cohort.
Yeah, and I actually think that some of those examples that you gave really illustrate just sort of how much personal touch goes into things in the beginning. Like people end up joining products or communities because of people. Ultimately, I mean, they like the product or whatever, but those personal touches go a long way. And I think a lot of people just kind of hide behind their company name or whatever, but people know Ryan Hoover and Product Hunt. It's not just, oh, here's this kitty cat telling me, what to do.
Yeah, absolutely.
And so switching gears a little bit, Jackie wants to know what drives you day to day. Like, what got you into entrepreneurship in the first place, and then later into investing?
Yeah, I've been actually trying to be introspective and ask myself that as well sometimes. So I think it's easy just like, I don't know, just I don't know, fall into something, and then you wake up and you're like, wait, why am I doing this? What I've realized is the through line is that I get the most enjoyment and energy from creating in general. So this goes back to like when I was a kid, I created or built like a tree fort. That was really fun. When I was a kid, I built a website, tried to make some money. I made like $10 net profit with several dozen hours of like learning and work, but it was really fun. It wasn't even about the money. And so creating things have been fun, like creating products. When it comes to the investing side, there's an aspect of like creation. It's obviously very different because we're not hands-on like building a product ourselves with portfolio companies, but we're building some things in terms of like some content that we're working on, and we're building some internal tooling as well. So trying to scratch more of that kind of creation itch, even more recently as of late. And yeah, I don't know. There's something about like creating something that people use and like interact with is just really fun to me. Independent of work, I'm trying to learn how to make music too. So that's like another creative outlet I'm trying to explore, and it's been really fun.
Oh, that's awesome. What on the side note, like what sort of music do you create or write?
Well, I'm like 2 or 3 months into it. I'm working with a music producer as a coach to teach me like basics of like electronic music creation. So
Cool.
just playing around on Ableton and taking sounds here and there, learning some of the basics, some of the pitfalls, and it's really fun. It's what I've learned a little bit is I haven't had I've had like CEO coaches off and on over the years, but independent of that, I haven't had like a teacher really since like school, and it's kind of made me realize like maybe I should get a teacher or a coach for like more things in life, because it's made it so much easier. The friction and like difficulty in going from 0 to 1 in music creation is like so much lower when you have someone there to guide you, at least for me. So anyway, that's something I've thought about too, is like maybe we need more teachers in our lives as adults.
Yeah. There's some interesting models now, especially with video conferencing, where maybe that, you can enable a global workforce to help teach more things, whether it's, I don't know, something in sports or music or hobbies. But
hmm
that's really cool. There are a whole slew of people asking, what would you say is sort of your biggest value as an investor? Like when you partner with founders, how do you work with them?
Yeah, the sort of our operating model, I suppose, is I give founders, because they often ask this question, this example of like there's two types of investors. There's a spectrum of investors. There's the investor who writes a check and then disappears. And that's not ideal, obviously, because you're hopefully getting more than just money, but you're getting some help or support in some other ways. And then you go over here and you're like, here's the investor who keeps asking me for updates, who wants to always meet up for coffee, who's like basically super naggy and like difficult to work with, and they're taking my time. And the reality is sometimes those investors are either not self-aware or they're selfish and they're like, I want information. I want to know, should I be preempting this round? They're like, they're being more extractive and more of like a burden than they are being helpful. And so we try to be neither of those, try to be in the middle, and that we're not going to disappear, but we're not going to bother founders. And the way we do that is trying to really understand where's the business at. So whether it's through, if the founder wants to do catch-up calls, we of course do those. We read all the investor updates, of course, and having perspective of what the company's doing and what asks they have, what needs they have, then we can actually be like very, hopefully highly productive and like very strategic, like tactical, I suppose. And like, okay, you need help with intros to XYZ. All right, let's look at our LP network. Let's search our Twitter followers. Let's look on LinkedIn. Let's find ways to like make introductions to those people. Or, oh, you want to jam on product ideas? Let's set up a time, for an hour to talk about like this particular product area. So a lot of it's kind of bespoke, I suppose. And then I guess the other aspect is every founder has like different needs at different times, but we just like Hustle Fund, like we're small investors. So we don't lead rounds and we're collaborative. And so a lot of our position is to be friendly and help them close around, if they need that support or help. And so we make introductions to other investors, either in the current round or future rounds. We're also not a signaling risk. So like if we don't follow on in your Series A, like it's not going to be an issue because we're not the lead investor. In fact, it's in our best interest for us to make an introduction to the best lead investor for them in that round. So our ultimate goal is to be like high ROI for the amount of equity that they're basically giving up.
And there are a whole slew of people asking essentially like, how do you invest as an investor? Like, do you expect terms to already have been set? Do you ever negotiate that directly with the founder? Do you lead rounds? Like, what does that sort of whole thing look like for you all?
Yeah, we don't lead rounds. Our model, everyone has a different approach to this. Our model is generally capturing about 2 to 3% ownership, usually in our first check. And that gives us enough skin in the game. It means that like each company theoretically could be multiple fund returner if things work out. And then in terms of like caps and valuations, I mean, it comes down to sometimes the stage, like where we're at. If we're sometimes we're the first meeting or very early on and they've not raised any capital, and it's really a conversation around what's fair and what makes sense. In which case maybe we help direct and guide like what that cap is. In other cases, we're the last ones in the conversation and everything's already set. To be honest, we try not to be like one of those investors who's like, we're more important than these other investors to give us a better deal, even though we're later, which maybe we should be asking for that. I don't know. But we try not to go that route. So we have to kind of take the terms at those stages. I know you at Hustle Fund have a unique model too. And like you're probably on average earlier than us and probably speaking with founders like earliest stages. And I don't know if you want to talk about how you approach things or if you want to stick to my world, but I think you have an interesting model.
Yeah, I mean, I think, well, actually paraphrasing a bit from what I'm hearing, it sounds like you all are comfortable, like assuming no terms have been set, you are comfortable if you want to do a deal in working out the terms directly with the founder, or are you waiting for somebody else to set the terms? Because that is something that we definitely do.
Yeah, we'll work with the founder and set terms. We've done that before in some rounds, and I mean, at the end of the day, I don't know why we'd wait. I guess maybe there's trade-offs of one, we and the founder don't know exactly what the market will provide. So if we set a number and maybe it's too high or too low, it could be a little bit off, but we're comfortable with that. And like at the end of the day, we make a commitment, we get our, as long as we get our desired outcome in terms of like percentage ownership. Like we shouldn't technically care if the market is coming in lower than us. So yeah, but yeah, how do you approach that? do you have like I can't remember. Do you have like a more structured system where it's like, it's almost like pricing tiers and like a SaaS company, or is it more conversational?
No, it's more conversational. I mean, sometimes it's easier to do things rule-based, but we don't have any rules. I think it's largely, let's say a founder comes to us and no terms have been set yet. We're very comfortable being first check in, but then like we're often proposing like terms on like some cap basically on a save. And then that's a discussion. And where those numbers come from, like unfortunately, like there's no science to picking the valuation. So I think that for us is just based on gut feeling of other deals we've done like of late in those geographies, in those sectors, et cetera. And as things kind of come and go in the hype cycle, obviously this market is tougher than a year ago. And, geography wise, I would say Silicon Valley tends to be higher in valuation than other geographies, both within the US and outside. So that's kind of how we end up picking a valuation cap, just based on the numbers that we're seeing in our own portfolio, that where it's relevant to that company.
Yeah. There's actually one add I'll make too is speaking with a friend yesterday about this. He's in the process of negotiating terms with his first round of financing, and I think another part of the conversation that we try to have is like, how much money do you need for? Our preference is 24 months or more, especially more in this market, and then kind of working backwards from there. So we wouldn't want a founder to say, let's raise $2 million at a $5 million cap is just an example. Like that would be bad. That'd be way too much dilution. It would cause problems in the future for them, which causes problems for us. And so if there was a world where it's like they need $2 million for 24 months, we might have more flexibility and like higher than 5 million or whatever the number needs to be to make it reasonable. So they don't take on like too much dilution in a round.
But how do you know like whether the founder can raise $2 million?
That's the risk I think you take when you're like writing, the first check. Cause the risk in writing that first check might be, let's just take a hypothetical example. First round of funding, we put 300K in at, I don't know, 8 mil cap or 6 mil cap, whatever it is. And then they can only raise another few $100,000, which gives them like 6 months runway. That is a major risk. We don't run into that very often. Like I'm trying to remember a certain situation where we have, but we've also been in a more bull market historically. And so that may be like something for us to consider and think about. There's one world where we don't necessarily do this, but where we hold the check to ensure the company can raise enough capital to make it reasonable. Because in some ways it's bad for everybody if somebody can only raise 6 months. Doesn't mean the company won't work out, but it is very risky. And means the founder is going to have to go raise, in 3 months later, and they're not going to be able to focus on product and building and so on.
Yeah. So I think probably because of the sectors that we invest in, we take that risk because having started my company during the last recession, when pretty much nobody could raise even 25K, like it's funny, I think, this is a tighter market and people are saying, oh, I struggle to raise, but, even in a lot of companies who struggle to raise, I still see people raising, at least 5K, 10K here and there, which is very different than in 2008, 2009, when people literally could not raise anything. And so my general perspective is that revenue should kick in and hopefully companies can become ramen profitable, but that obviously only applies to certain categories like, B2B, for example. And, in the old days, there wasn't even really venture funding at all. So people were entirely dependent on customer money. And so that's kind of the mode that we're in, but it also means that those are the categories that we're funding because we're taking that kind of risk. And I think that's sort of a good segue into some of the other questions that we have, because there are a bunch of people who are building consumer apps or apps where it will take a while to get, enough, call it traction, to bring in enough sort of dollars. How do you think about this issue of let's say that they need something like $2 million, to kind of build out the full-fledged thing and sell enough stuff and whatever it is. Like, how do you think about businesses like that? Do you lean into those, and how much needs to be built by the time you get there and stuff like that?
Yeah. Yeah. In some ways, I'm always like, don't invest in consumer social. I mean, consumers broad, but like consumer social especially can be very, very difficult. But at the same time, I can't help but look at those companies, and we backed a number of them. Majority of our portfolio is actually more B2B, but there's some consumer. And I think the way we think about it is, I mean, there's one which is like the pre-product side. So there's maybe they have an idea, but it's super early. We invested in like Alex Ma, for example, back when he was doing TTYL, and I had conviction in him and his insights and his ability to execute, knowing that maybe TTYL wouldn't be the thing that worked. TTYL, by the way, was back when like AirPods were fairly like just coming out. It was essentially an audio social network of sorts. So a lot of really compelling like answers to the why now question, and really thoughtful ideas around the product design. And fast forward, they've iterated on a bunch of products, and Paparazzi being maybe the most well-known of the cohort of things they've launched. And so some of it's strong conviction in the founder and their ability to like navigate the nuanced world of consumer social. Another component that's really important for us is especially if it's a consumer social play that needs to be massive scale with basically no revenue. We have a bias towards small teams, like very small teams in those cases, because their burn should be low. And also, I think it's a mistake if founders are if you're building like a 10, now, I don't want to speak in generality, too many generalities, but in general, if you're building a consumer social product and you have like need 10 people to build it, like the V1 and like the first version, like that's concerning. Like until you have some sort of product market fit or some semblance of like traction, then you should probably hire your fifth person or sixth person maybe. So I think we're just more accustomed or interested in backing companies who are very small, very tight, generalists, very strong in product consumer thinking. And then if it's post traction, then it's a lot of it's like, metrics and do we have conviction is sustainable, which is a really hard thing to figure out. Honestly, it's like, okay, these metrics are really good, but it's been 3 months, let's say, in the market, and who knows, consumers are very flaky and they churn, month 6. That can be really hard to figure out.
Yeah. So I guess what I'm hearing from you, because you mentioned lean and burn, and like you are looking for sort of companies in this market to be leaner and have a lower burn rate and stuff like that, maybe even needing less capital. And am I reading too much into this?
Yeah, or at least if they're raising $2 million, well, I guess the bias would be they have a longer runway than your average B2B company, assuming no revenue in both cases, just to kind of keep them on equal footing. Because in B2B, generally, there's a clear need for, like, on average, there's a clear problem to be solved. And usually there's also a clear like market need. Like it's less risk about like, do people want this thing? Whereas consumer social is like, do people want this thing? I have no idea sometimes. And so it requires like more iterations and sometimes more time, I think. Not to say that B2B can also not take a long time to figure out, but it feels like the path towards building a product in a company is a little bit clearer versus consumer social is like a very like fuzzy, windy idea maze.
Yeah, and we don't touch it at all. I mean, I think, and there are a couple of other questions in here about like requirement of full time and expectations around capital and stuff like that. I mean, I think actually one of the things that I care a lot about that I really want to plant a seed here for everybody is like, I think historically in the last couple of years, things have been so frothy. Everyone and their mother has this idea that you go and raise $5 million and you just kind of spend 50K a month and do all this stuff. But I'm very much in the mindset of if you were building in 2008, 2009, you're just trying to get to ramen profitability. You're not really taking very much capital, if anything. And 25K goes a really long ways to get you to your first sales such that your business can actually sustain you. So that's kind of the mode that I'm in. And those are the kinds of founders we're looking for, people who can start making money right away and even pre-sell ahead of product. I don't know how you care about things, but maybe I'm just too old school.
Yeah. I guess I am. I love that. But I wouldn't say it's like a requirement, I suppose. Because there is the risk too of maybe over prioritizing revenue generation to some extent. I think it is a good forcing function in some ways to like also prove that customers are willing to pay earlier sooner than later. But but yeah, I don't know. I think it kind of depends. That's why like as much as startup advice is that there is out there, it's always like I think founders need to take it always contextually and understand the nuances behind it before like blanketly applying it to their business, let's say. Um, but yeah, I mean, one example of a company we backed actually in a space that we normally don't invest in, a more technical driven space in thermodynamic computing, not a space I really fully understand or typically invest in. But after doing a bunch of research and speaking with the team, what we loved is they already had a $2 million LOI, like a multi-million dollar contract lined up before they built the product. And I was like, this founder isn't one of those technical founders who's like, I'm going to build this thing. It's going to take a decade, but it's going to change the world. It's like, okay, we're going to build a thing. It's going to take a long time. It's going to change the world. But by the way, we have a V1 that's going to make money now, like tomorrow. Um, and so I love that. I love founders who are scrappy and able to get money sooner than later if they can.
And I think also sometimes it helps like shape how to take your product as well, because you're building for something very specific, like your customer has this problem and needs to solve it in this way with this workflow. Do you fit in or not? And I think that's a little bit easier than some theoretical thing of, I sort of think the problem is generally this, but I'm not really sure.
Mm-hmm.
But there are a lot of people asking about consumer and your view on the future of social. Like, what do you think is the future of social? Um,
Yeah. So social, there's many different ways to look at it. Like it kind of goes back to the shifts component. So there are platform shifts or technology shifts or generational shifts or behavior shifts. Like I think right now when it comes to consumer, social, mobile, like the things that we've all right now, it's very difficult to convert someone's existing behaviors and pull them away from their existing networks. And so I think it requires just some capitalization of those things I mentioned. So something has to change. It needs to be almost like an opening. And I think it's harder and harder to innovate on UX. Let's take Snapchat as one example where Snapchat wasn't really capitalizing on any, as far as I can think of, like any technology shift per se. It was really capitalizing on a generational shift and like a consumer behavior shift and a UX kind of innovation on top of that. So like the ephemeral photos for younger generations that didn't want to post permanent photos on Facebook and Instagram and so on, that appealed to them. And there was a very nuanced, very like just a very nuanced perspective and understanding of like the user persona or like psychology at that time. I think today it's much harder to just innovate purely on UX. We're just so far in the maturity of mobile devices. And so I'm personally more interested in new platforms and technology innovations that unlock some sort of new mode of interaction or network or something like that. I don't know what that looks like though. I'm not going to pretend to be able to know what consumer social product to build, but yeah.
Do you think that's like, I don't know, something completely different, like off of Apple glasses or something like that? Or do you think it's just a new way of thinking about things on mobile?
Yeah, unfortunately, I can't think of any hardware that's going to be like mainstream enough. If we're thinking like consumer social at like mainstream, broad, hundreds of millions of user scale, unfortunately, there's no hardware device I can imagine that's going to reach that kind of scale, including VR or AR glasses or anything for a while. So, it might still be regulated to this device from a hardware platform perspective, but it may just be some sort of other technology shift. So I don't know, not to jump on the AI train. I don't know what AI and consumer social will enable, but that is unlocking some new creative tools that, may have the potential to create new modes of interaction and new networks and new identities to some extent that we can't really, predict today.
Mm-hmm. I think we have time for one last question. I think one that's interesting here from Hollock, and I apologize if we did not get to your question. But this question is, what have you not, I guess, done so far that you would be excited to do in, call it, the next 3 to 5 years, you personally?
Yeah, there's a couple things. Like one non-work thing is going back to the music thing. My goal this year is to release like a small EP. And so I've set that goal. Not going to promise the music's good, but my goal is to create something I'm at least proud enough to release publicly. And then I've been thinking more about like basically alternative investing models a little bit. And so, right now investing, as a venture capitalist with a traditional kind of model, fund model, 2 and 20, and I'm more interested in like, what are some new models for, whether it's investing in SMBs or investing in creators or buying businesses, like small micro PE roll-ups, like all those things are kind of interesting to me as a different asset class and different problem to solve potentially. I'm not actively working on anything in those spaces, but it's something I'm keeping my eye out open for. And I have a bunch more friends who are seemingly like more interested in these alternative models. Feels like that's like a very common thing for people who have raised VC. They're like, okay, what is a non-VC investable way to build a business or, get access to a business or equity in a business? So yeah, I expect there probably be a lot of exploration in those spaces in the coming few years.
Do you have any thoughts and insights along those lines? There are a bunch of questions around whether you're investing in creators or musicians or NGOs or like other things outside of tech startups, like anything that you are mulling over right now more specifically, or not yet?
Yeah, well, so the other asset classes I suppose I'm investing in are not a lot, but I am investing in some small funds, mostly smaller funds, and half that's like to get experience there. It's kind of like when I started investing in startups. I'm like, all right, let me start earlier than later, investing as an LP. So that's been fun. And these are like stupid small 10K checks. Like I don't have a lot of money to go around, unfortunately. And then I'm investing. This is actually a portfolio plug. I'll even put the URL as a good investor in the chat. So I am investing in some SMBs through Bonside actually. So it's, yeah, you invest. Let's say it's a hair salon or like a matcha shop, and you essentially get a revenue share every month. So, it's not going to be like 100x return. Just it's not the way the model works, but I'm also probably not going to lose my money. So it's been really interesting to see that evolve.
Oh, very cool. Okay. Well, I think that's all the time that we have. Thank you so much, Ryan, for taking the time to chat with us all today. If people want to get in touch to pitch your company with Ryan, what's your email address again?
Yeah, just Ryan at weekend. I forgot it for a second there. Ryan at weekend.fund is the email.
Ryan at weekend.fund, everyone. All right. Thank you all. Take care.
See ya. Thanks.